ITC has always been about innovation and trying new things and pushing this industry forward. So this year, we wanted to do the same. And for the first time, 5M and ITC, we joined forces to create something new, and we called it ITC TV. It was a live, on-the-ground broadcast covering the entire conference as it unfolded. And we brought the full 5M production crew to Las Vegas with us, with our cameras rolling and editors cutting in real time and streaming across ITC TV and LinkedIn simultaneously. It was just a pilot, but it worked out incredibly well. And what we captured this year was different. Founders and executives, they weren't sugarcoating. Instead, they were talking about what's not working, the missteps, the overspending, scaling before readiness, and underestimating complexity. And maybe most importantly, what they still had yet to unlearn. Session after session, one theme kept surfacing: the need for focus. Instead, teams needed to be stripping away what's unnecessary with smaller groups and tighter scopes and sharper execution. You could hear the influence of people who have spent years inside of legacy carriers, and those same people now asking one hard question: what happens if we don't change fast enough? Tim Sweeney, the CEO of Liberty Mutual, he put it really bluntly. He said that playing it safe is now the riskiest move. So he laid out a 4-part strategy for carriers who want to do more than just survive. He said you've got to invest early, you've got to build embedded innovation labs, you've got to partner with tech and academia, and perhaps most importantly, you've got to develop the operational muscle to make transformation stick. He summed it up really nicely with just one line. He said, innovation is now existential. And throughout the week, we saw what that looks like in practice. MGT, for example, they launched a new commercial lines platform that can quote, it can underwrite and bind all in under 2 minutes. It was fully integrated, no paper and no duct tape. They also announced a $21.6 million oversubscribed Series B round. Their insight is that the real bottleneck in insurance isn't regulation, it's fragmentation. So they're owning this stack, tech, underwriting, and service all under one roof. Then came Intellect AI. They're embedding intelligence deep inside of claims and billing with new modules that sync directly with underwriting. They surface causation patterns and exposure shifts before the renewal decision even happens. And here's what stood out the most. They estimate that 70% of all that capability would disappear without AI. That tells you just how deeply woven in it is. Then we heard from Near Space Labs, and they made a different case for fresh data. Their fleet of high-altitude balloons capture stratospheric imagery across both urban and rural areas, giving them a major cost advantage over traditional fixed-wing flyovers. That lower cost means that they can capture imagery more often and at higher resolution across broader geographies. The result is that carriers no longer have to choose between coverage and currency. They can access visual data that's both recent and precise, updated frequently enough to detect change, validate property conditions, and model emerging risks in real time. For insurers that are trying to close the gap between policy data and physical reality, Near Space Labs is providing something new: continuous visibility. Then came WTW's Radar 5, and it wasn't just faster AI, it was transparent AI. The new release, it includes a generative assistant that helps underwriters interpret model performance. It also flags anomalies and makes real-time adjustments with context they can trust. It's not replacing actuarial insight, instead it's augmenting it. And in an industry that's built on accountability, that transparency, that actually might be the most disruptive part. Salesforce picked up that same thread, but they pushed a little bit further. They showed us what happens when AI stops being a tool and starts acting more like a teammate. Colette Bartosik framed it perfectly. She talked about how CEOs keep asking why it is that we hire great people, but the work, it still feels mediocre. And the answer was disconnected systems, fragmented data, and non-stop admin. Salesforce laid out a maturity model that moves from predictive to generative to then agentic AI, where intelligence doesn't just respond, it acts. At that level 3 with Agentforce, AI connects systems, it triggers workflows, and it delivers outcomes autonomously, not someday, but now. Then came the story that brought it all to life, where Jerome Simmons, he's from Salesforce, he shared the example of how Salmons Financial Group, before their transformation, reps were juggling 16 separate systems just to serve a single customer. And because of the burnout, attrition was up to 45%. After adopting Agentforce, everything lived in one platform. Reps had a 360-degree view of the customer, and attrition dropped by 20%. But the real impact, it wasn't technical, it was human. Their AI assistant, Emma, it now handles the routine policy work and frees reps to focus on things like empathy and relationships and the conversations that actually matter. And that's a big takeaway for carriers. Unify your data, use agentic AI to handle the repetitive work, and give your teams the space to deliver what sets them apart: the empathy, the speed, and the value. Later in the week, we stepped into one of the most grounded and technical conversations at ITC. It was a panel on real-time data, which featured leaders from USAA, WTW, Hercules AI, and ServiceNow. It was refreshingly honest, and the consensus was that the core problem hasn't changed in 20 years, but our ability to do something about it finally has. Shannon Gilbert from USAA shared a story that caught everyone's attention. Their claims team cut decision latency from 48 hours to under 5 minutes. And not by chasing real time as a buzzword, but instead aligning the right data with the right moment in the decisioning process. That single win, it changed internal mindsets, and it unlocked a whole wave of broader adoption. Dr. Magda Ramada from WTW, she piled on and added an insight that really stuck. She said that it's not about the volume of data, which is what we're all chasing. Instead, it's about the timing. See, claims might move on a multi-day rhythm, and underwriting, it might shift to hourly. So real time, it isn't really the goal. Instead, alignment is. And then came one of the most relatable stories of the week from Kevin Hurwitz and Garrett Harvey at Praxin. They told us a story about an insurer that was running on a 40-year-old core system written in BASIC, and it was maintained by a single engineer nearing retirement. That's a story we all know too well. But instead of diving straight into redevelopment, they started with visibility. Using AI, their team combed through millions of lines of undocumented code, uncovering hidden logic and forgotten third-party dependencies. In fact, the company thought that the system was only connected to 2 external platforms. It was actually 6. With that clarity, they built a new platform, but in parallel, bringing components online one at a time. There was no downtime, there was no surprises, and there was no disruption. Just instead, controlled and informed modernization. And that idea, visibility before action, it echoed across the entire week. Every conversation about transformation, whether it was data, AI, operations, it all came back to the same discipline. You've got to understand what you have before you try to rebuild it. Then came a sharper look at the edge of innovation. CB Insights, they revealed their list of the top 50 early stage insurtechs, and this time it wasn't about who raised the most money or who moved the fastest. Instead, it was about traction, and that's hard to fake. The companies that made the list, they weren't chasing hype. Instead, they were hiring through downturns and securing partnerships and delivering real products. It was startups like Delos that was tackling wildfire exposure, and ComScience using Vision AI to prevent workplace injuries. These are solutions that go after pain that insurers have carried for decades. But one quiet signal stood out. Personal lines were nearly absent from the list. And I don't think that's because there's no opportunity, but maybe because it's almost impossible to break into. That silence, it says a lot. It points to both a challenge and an opportunity. A market perhaps so entrenched that the next breakthrough, it may not come from within, but from without. On the final day, Marcus Rue, co-founder of Guidewire, he opened with a reminder that a lot of people needed to hear. Complex systems cannot be built overnight. And transformation, it isn't a project, it's a strategy. And it only works when we respect the complexity, not ignore it. As he put it, enterprise software is now infrastructure, it's not a playground. And that theme, it carried through the rest of the closing session. We heard from Lemonade, Hippo, and Clearcover as they shared the stage, not to defend the past, but to dissect it. See, growth had cooled and expectations had reset. And instead, what emerged were smaller teams with sharper focus and a more candid conversation about what actually takes to build a carrier that lasts. Contessa Brewer from CNBC, she pushed the discussion even further, asking what all of this means for distribution. And Rick McCarthy, he answered it best. He said that agents still matter, but only if we can make it easier for them to care. And that line, it seemed to capture the mood of the entire conference. Less urgency to be first and more interest in doing it right. Leaders making sharper trade-offs than choosing where to invest and what to walk away from, and asking 3 hard questions. What can we prove? What can we maintain? And what is no longer worth doing? Beyond the keynotes and the main sessions, we roamed the floor talking with solution providers and attendees about where they're focused next. And we also had the honor of sitting down for some intimate discussions with some of the industry's brightest minds. We chatted with Jake Sloan and Joe Zook, Bill Harris and Nicole Peck, Risha Mahadeo, TJ Olonilua, Rob Shimmick, Graham and Michael Topol, and the Insurance Commissioner of Connecticut, Andrew Mace. You can catch all of those conversations on our 5 Minutes channel, each one a candid look at how leadership, technology, and purpose are all reshaping this industry from the inside out. This year's ITC didn't hand out neat answers. Instead, it offered something even more valuable, a clearer view of how the industry is really evolving. It's quiet and it's deliberate. And through better thinking and sharper choices and real conversations between people who are still close to the work. The headlines will keep coming, but the real change, it's already underway. It's focused, it's disciplined, and it's well considered. Before we close, I want to take a moment to say thank you. But I also want to say thank you to ITC for the opportunity to partner on this project. You guys have built something iconic in this industry, and it's been an honor to contribute in just a very small way to that legacy. And to my beloved entire 5M production crew. They've put in 12-hour days capturing, editing, and delivering this coverage. I want to thank you. Your talent and energy made all of this possible. So we're going to keep innovating, we're going to keep experimenting, and we're going to keep finding new ways to elevate the conference experience. So from all of us here at 5M, we're just getting started. We'll see you next year.